When you're setting up accounting for a business, in general, you have a choice between a cash or accrual accounting. Cash accounting method is generally used by sole proprietors or small businesses that do not carry inventory. What cash method of accounting means is that your income is booked when you receive a check and your expenses are booked when you pay a check. So it's very straightforward, it's very simplified, and it's very helpful if you're a business that is literally going week to week on payroll and other expenses. You know exactly what you have in and you know what you have out. The other side of that is the accrual method accounting, which is normally used by any business that's over $25 million. That is a requirement. You have to use accrual. If you're a business that has money in the bank and you're not worried about, am I going to make the payroll this week, then the accrual method is used. So the accrual method, you're booking your income when you create an invoice, and you're booking your expenses when you enter bills or enter a purchase order for payment. So the key reports that come out of an accrual method are your accounts receivable report and your accounts payable report. Your balance sheet is much more important if you're in accrual method because those numbers show up on that balance sheet and it's showing you what is my pipeline for revenue coming in and what's my pipeline for expenses going out. Depending on how effective your accounts receivable management is, accrual method can hide flaws. If you have a lot of invoices that were entered that may take 6 months to a year, if you have government contracts, you're looking at a 1-year turnaround. So that needs to be factored in when you're looking at accounts receivable report. Are my accounts receivable always paid substantially within 30 days so I can count on this money as I'm doing my cash forecasting? Or do I have the types of contracts where it could take 6 months to receive an invoice? Good accounting programs allow you to run both of those reports as long as you're entering in your bills and your invoices as they're received. And so you can look at your cash basis reports and you can look at your accrual basis and get kind of the best picture of all. If you're not entering your invoices in when you are creating a service, then you can't use an accrual method report. And if you're not entering your bills in before you pay them, you're also not able to pull that report. Cash method accounting, as I said before, is best for small businesses and sole proprietors. They can't spend the money until they have the money. So whether I have $100,000 in accounts receivable and invoices out there, I'm not going to be able to pay my payroll tomorrow unless I get a payment on an invoice. So a cash basis is very important if you're a business that's starting out and is running on a week-to-week, month-to-month basis. You can use your profit and loss for cash forecasting, but it's more important to you to know what I have in the bank today.